Hey guys, Zoeb here from OneGlanceTrader.com and welcome back to the final part of my course, the Forex Scalping Strategy. Now I'd like to thank everyone that's watched parts 1 to 4 in its entirety and started to apply some of the theory that you've learned inside this course. And if you're brand new, don't worry, you can click the link in the top right hand corner or the first link in the description, and that will take you to the YouTube playlist where you can watch from the beginning the full course. Now, in the previous video, we went through risk management from stop loss to take profit targets to lot size, and we're going to touch on that in this video as well. But the majority of this video, we're going to be talking about the settings to go get A++ premium trade setups. And then what we're going to do is go through a trade end to end with those settings, where you put your take profit, your stop loss, and your lot size, everything all into one. So, as I mentioned, we need to tweak the RSI MTF indicator to really get the A++ premium setups. So, what we need to do is we need to change the RSI overbought oversold settings to 75 and 25. And what that does is that will now give you alerts when the RSI gets into 75 for overbought and 25 for oversold. Now that's quite important because very rarely does the RSI get to those extreme levels of 75 and 25. And what it's doing now is that if the RSI does give you a signal that it is got to 75 or 25, therefore price has extended even further than the 70 and the 30. Therefore, it's a higher probability chance that price will either pull back or start to reverse. And again, when you set up these settings, you'll notice that you won't see that many signals as you did with 70 and 30, and that's because price doesn't generally give you the outcome of the RSI getting to 75 or 25. Again, giving you these what I'm calling premium setups here, that when it does happen, there's a strong indication that price is going to reverse, and therefore we can use that as an opportunity to extract pips from the market. The next thing we're going to do is add an additional layer onto that is by changing the time frame quantity to 1. And what that does is that not only looks at the current chart you're looking at or your trading chart when the RSI gets to 75 or 25, it also needs to be the same situation one time frame above. So to put things in perspective, if you're trading the 5-minute chart with 75 and 25 on the RSI, you will only get a signal when the 5-minute chart is either at the RSI on the 5-minute chart is at 75 or 25, and the 15-minute chart is also in an overbought or oversold territory at 75.25. So we have just added, a complete different dimension to the settings, giving us, the rarest kind of situation for this kind of setup to occur. And you'll notice again when you put this on the chart, you will get signals, but there won't be as many as you did previously when you had 70, 30, and 0 on time frame quantity. But again, it gives you those A++ premium sales by doing that. And one of the point I just want to mention is around the divergence. So, the more obvious the divergence is, the higher the probability that the trade is going to be successful. So, if price is making a very steep higher high gradient, but the gradient for the bearish divergence of the lower high is more than what the price is doing, therefore you have got a big disagreement between price and the oscillator, again giving you a very strong probability that price is going to reverse. So, tweak the settings, have a look on the chart, see what happens. I think you'll be pleasantly surprised when you backtest to see when these setups do occur that you are going to, really profit from these. And it's these type of settings that I personally trade with, and it also helps when I talked about in the risk management section of moving your stop loss to break even when you hit 1 ATR, because it's these types of setups that really tend to be trend reversal situations. So therefore, you can really pocket 2x, 3x the ATR in terms of your take profit. So have a look at that. I really hope that really helps you in terms of getting those A++ setups. So now what I'm going to do is just take you through, for the last time, very visual trade example, step by step, to really explain the theory, so you can really, when you start back testing the system, when you go just before you go live, to really understand the main concepts, because it can be a bit difficult to grasp if you've never really, especially the divergence element, if you've never really looked or traded divergence before. So the first step is to identify a period where the RSI has been overbought or oversold for 3 consecutive candles, and then has come out of overbought, oversold territory. And as you can see on the chart here where I've circled, that the RSI was overbought for 4 consecutive candles, and the last bar does not have a downward arrow on it, signifying that the RSI is now out of the overbought condition. That could be at 70, 75, whatever you decide to set it at. So that's step one, and that is, we've got that complete, which is great. The next step is, have we got bearish divergence? And hopefully you can see now that this is very obvious bearish divergence. Price is making higher highs. The MACD should also be making higher highs, but it's not. It's making a lower high, and therefore there's a disagreement between price and in the indicator, and this pattern is a bearish pattern, indicating that there's a probability, a very high one, that price will reverse. So we've got that, and also price coming out of an overbought territory on the RSI. So our setup is now confirmed, and just before we're about to go short on the close of that bar, what we need to understand is what is our lot size, stop loss, and take profit. So the first thing we looked at is the ATR reading. So the ATR at the last closed bar is at 9 pips. So therefore, we now know that our stop loss needs to be 18 pips away from the current price. Again, to determine our lot size, we have to understand what is the maximum loss we're willing to lose per trade. So using with the example in the previous section of this course, we're going to stick with £10. We know from the ATR that the stop loss is going to be 18 pips away. So therefore, £10 divided by 18 pips gives us 55p per pip per point is what we need to set the lot size when we input that into the terminal. We're going to set our take profit at 1x the ATR, so we'll be at 9 pips, so therefore our reward to risk is 1 to 2. So we are risking, we're looking to gain 9 pips and risking 18 pips. So again, that gives us a nice 1 to 2 reward to risk ratio. So how does that look on the chart once you've entered? So you enter on the close of that on that candle, or as close to the close once you've done all your calculations and input your lot size and all that kind of good stuff in there. You then put in your stop loss, which is 18 pips away, and conveniently that is just above the highs of the previous high, which also gives us another good confirmation factor that price, if it does reverse, it needs to break through the previous high. And as you can see here, that the take profit is closer to our entry than the stop loss, because it's only 1 ATR away at 9 pips. So that there of what I've just gone through is the kind of logical process that you would go through in terms of scalping this opportunity and entering the market. And as you can see, what happens, price really rarely went anywhere near those highs. It went back to its entry point a couple of times, and it did go against us slightly when we entered this trade. But you can see quite comfortably it got nowhere near our stop loss and went straight to our take profit target. And again, I'm not too sure, depending on when it actually hits the take profit target. Again, what we could have done is not put the take profit on, set it up, just wait, just draw a line on our chart, have an alert on our chart when price hits this line, we move that stop to the entry, and as you can see, when it does that, price never went back to the entry until here, and then you could just just trail it over here, and you probably would have got, depending, you probably would have moved your stop loss there when it got down to this low, and then retraced back and went down here. You probably would put your stop loss here. You probably would have stopped out at this line over here, which is probably a 1-to-1 or 1.5-to-1 in terms of a reward there. So again, that's an example of more advanced strategies to get a better reward to risk ratio. So I really hope that makes sense of this. And again, you can get these slides, rewatch the video, so you can kind of walk through this a number of times to really understand how the process works. So we've come to the end of the course, and I just really want to summarize everything here that we've kind of gone through. So, scalping, you can make big gains on scalping, but I have to caveat, you can also make big losses as well. So, try this on demo. Once you start getting to a 70% hit rate, you're starting to see how price moves, and you'll learn what happens as the more and more trades you do. Get comfortable and start open an account with a small kind of starting capital, and make your risk £5 maximum risk per trade, or £1 per risk, whatever you need to do. Just start getting comfortable with it all. What I found is, simpler the rules, the better the scalping strategy is. And like I said, I've been trading this now for 4 or 5 years, and I've just taken two trading strategies in their own right, in terms of overbought, oversold RSI and regular divergence, added them together to give one overall trading strategy. And again, you can download all the indicators, templates, everything in this that I've gone through in the course. It's all in the link inside the description. And I really hope you guys have found value in this whole course. And please let me know how you're getting on. And if you've got any questions, you need me to look at any charts, I'm more than happy to look at that for you. It might take me a bit of time to reply, because I do get a lot of emails coming through about loads of videos on my channels asking to look through some stuff, but I will get back to you, I promise you that. Leave me a comment, please please subscribe, and I really hope that I've added value to your trading, and I really hope that you've enjoyed this course.